might think that you need thousands of dollars to start investing, but that's simply not the case. In today's world, you can initiate investments with as little as $100, and even with this modest amount, you can begin building wealth for the future. In this video, we'll explore how to get started with investing. Even if you have a limited budget, whether you're new to the investing world or just looking for ways to make the most of your $100, we've got you covered. Let's dive in and take your first step toward financial growth. Understanding the basics of investing. Before diving into any investment, it's essential to understand the basics. Investing is the act of allocating money in the hopes of growing it over time. The goal is to generate a return, whether through dividends, interest, or capital gains. However, every investment carries risk, the potential to lose money, and understanding this risk is crucial before committing your money. For beginners, it's important to understand the different types of investments available. Common options include stocks, bonds, real estate, and mutual funds. Each of these investments offers different potential returns and comes with varying levels of risk. For someone starting with just $100, focusing on low-cost and relatively low-risk investments is usually the smartest move. Stock market investments. One of the most common and accessible ways to invest with a small amount is through the stock market. While individual stocks may seem intimidating at first, there are now several ways to get involved without spending much. For example, you can start by purchasing fractional shares. Fractional shares allow you to buy a portion of a stock rather than having to purchase a full share. This is particularly helpful when stocks of companies like Apple, Amazon, or Tesla cost several $100s per share. By investing just $100, you can still gain exposure to these high-performing companies and benefit from their long-term growth potential. Another option is exchange-traded funds, ETFs. ETFs are collections of stocks, bonds, or other assets grouped together into a single investment. They allow you to diversify your portfolio even with a small amount of money, which reduces your overall risk. Many ETFs have low fees, making them an excellent option for beginners looking to start small. Robo-advisors. If you're not sure where to start or lack the time to research individual stocks, robo-advisors provide an excellent solution. These are automated platforms that manage your investments for you, based on your risk tolerance and financial goals. The best part: many robo-advisors allow you to start investing with as little as $100. Robo-advisors like Betterment, Wealthfront, or SoFi invest your money in a diversified portfolio of ETFs based on your personal preferences. These platforms typically charge a low fee for managing your investments, and they handle everything from rebalancing your portfolio to reinvesting dividends. All you need to do is set up your account, define your goals, and let the robo-advisor do the rest. This makes robo-advisors perfect for beginners who want a hands-off, low-maintenance way to invest. Peer-to-peer lending. Another unique way to invest with as little as $100 is through peer-to-peer, P2P lending platforms. These platforms connect borrowers with investors, allowing individuals to lend money directly to people or small businesses in exchange for interest. Some popular P2P lending platforms include Lending Club and Prosper. When you invest in P2P lending, you are essentially acting as a bank. You lend your $100 to a borrower who will pay you back with interest. While this can be a good way to earn passive income, it's important to keep in mind that there's always a risk of the borrower defaulting. However, many P2P platforms offer tools that allow you to diversify your lending portfolio, which reduces your exposure to individual loan risks. P2P lending can provide attractive returns, but it's crucial to carefully research the platform and borrowers before committing any money. It's also wise to start small and gradually increase your investment as you become more familiar with the process. Real estate crowdfunding. Real estate has long been considered a profitable investment, but traditionally, it requires significant capital to get started. However, thanks to real estate crowdfunding, you can now invest in property with as little as $100. Platforms like Fundrise and Realty Mogul allow individual investors to pool their money together to purchase real estate properties. These crowdfunding platforms give you access to commercial and residential real estate deals that would otherwise be out of reach. By investing in real estate through a crowdfunding platform, you can benefit from the potential appreciation of the property value and rental income, all with minimal capital. Real estate crowdfunding typically involves longer investment horizons as the properties are held for several years. However, it's a great way to diversify your portfolio with a tangible asset class and start building wealth in real estate without having to own property directly. High-yield savings accounts. For those who want to invest with minimal risk, high-yield savings accounts, HUSA, provide a safe place to grow your money with a better interest rate than traditional savings accounts. While the returns won't be as high as stocks or real estate, the key benefit of a HUSA is that it offers security and liquidity, meaning you can access your money at any time without losing principal. Many online banks offer high-yield savings accounts with interest rates higher than those offered by traditional brick-and-mortar banks. For example, you may find savings accounts offering 1 to 2% interest rates, while some online banks offer rates of 3% or more. While this won't make you wealthy overnight, it's a great place to park your $100 while earning more interest than you would in a regular savings account. A high-yield savings account is perfect for those who are risk-averse, but still want to earn something on their savings. It's also a great option for short-term investments or building up your emergency fund before making more aggressive investments. Cryptocurrency. Cryptocurrency has become an increasingly popular investment option over the last few years, and it's possible to get started with just $100. Cryptocurrencies like Bitcoin, Ethereum, and others are traded on platforms such as Coinbase, Kraken, and Binance, and you can invest in them with small amounts of money. Cryptocurrency is highly volatile, meaning that prices can fluctuate rapidly, which can make it a high-risk investment. However, for those willing to accept the risk, crypto has the potential for significant returns. The key to investing in cryptocurrency with $100 is to approach it cautiously. Start small and only invest what you can afford to lose. It's also wise to diversify your crypto holdings rather than putting all your money into one digital currency. Cryptocurrency can be a good way to add some growth potential to your portfolio, but it's essential to stay informed about market trends and the evolving regulatory landscape. Dollar cost averaging. A great strategy for those starting with small investments is dollar cost averaging, DCA. DCA involves investing a fixed amount of money at regular intervals, regardless of market conditions. For example, if you invest $100 every month into an ETF or a stock, you'll buy more shares when the price is low and fewer shares when the price is high. Over time, this helps you build a diversified portfolio at a lower average cost. DCA is especially helpful for beginners as it eliminates the need to time the market, which can be tricky and risky. By consistently investing a fixed amount, you are less likely to panic during market fluctuations and more likely to see long-term growth. Investing doesn't require a fortune to get started. With just $100, you can take your first step toward financial growth and wealth building. Whether you choose stocks, ETFs, robo-advisors, or real estate crowdfunding, the key is to start now and be consistent. Remember, the earlier you start investing, the more time your money has to grow. Thanks for tuning in. If you found this video helpful, don't forget to like, subscribe, and comment below with any questions or thoughts. Keep investing smart, and we'll see you in the next video.